podcast is provided for informational purposes only and should not be relied upon as legal, business, investment, or tax advice. All opinions expressed by podcast participants are solely their own opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Due to industry regulations, participants on this podcast are instructed not to make specific trade recommendations nor reference past or potential profits, and listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.
Welcome to the Hedged Edge by RCM Ag Services, where we're getting out of the field and onto the mic to bring you weekly market updates, commentary from commodity experts, and monthly interviews with the biggest names in agribusiness. Welcome to the next edition of the Hedged Edge. I'm your host, Jeff Eisenberg, and today we're really excited about the opportunity to talk lumber. We knew commodity markets were going to be exciting this year, heading into 21, but we didn't really know where and when it was going to fire up. Turns out we're a bit of a dark horse kind of looming in the commodity world, and that's in lumber. At current prices, front month lumber futures have seen an increase of over 300%. From this time last year, right in the middle of the pandemic, if you will. So the question is, what's causing this spike in lumber prices? How are lumber traders handling this? And what's in store for the next 6, 12, 18 months as lumber demand continues to rise? What's going to happen to the existing stocks of lumber? What's going to go on with home prices? So today we're honored, actually. We brought on the COO of Sherwood Lumber Company, an industry veteran, Kyle Little, to join us from a 30,000-foot aerial view into drill down into the individual forests, the lumber markets. So welcome, Kyle. Welcome to the show.
Hey, thanks, Jeff. Glad to be here. Thank you for the invite.
Oh, yeah, this is great. So before we get jumping into lumber, we've chatted here ahead of time. You're from Pittsburgh. I'm from Cleveland. We should probably have some sort of, gridiron battle here in the backyard. But, one thing that I just recently read, and this kind of rings true, I've been a Pittsburgh Penguins fan from young time. My dad grew up in New York City, and his childhood friend moved to Pittsburgh and was a fan. So we would go over to games, and Jaromir Jagr, the guy was amazing. He had Mario Lemieux as his counterpart, or maybe some would consider it the opposite. Lemieux had Jagr. But Jagr, he's now playing still, age 49. He's a 33-year veteran. What do you remember from the Penguins?
Oh boy, I lived in Pittsburgh for over 20 years. Just recently moved here to New York, where our company's headquarters, and I was a Pittsburgh Penguins season ticket holder, so I know the teams very, very well, and was really spoiled post Jaromir Jagr and Mario Lemieux, and having Crosby and that whole team come through and get to see multiple Stanley Cup playoffs. And yes, I'll tell you, there's nothing better than going to a Stanley Cup finals game. Like, it is literally standing room only. You never sit in your seats. It's an absolute electric, win or lose. It's just an amazing feeling. But Pittsburgh in general, just the way the town is and diehard sports fans, having the opportunity to live there was unbelievable, and I miss it immensely. In fact, I know New York is always talked about the sports mecca of the country, but I'll tell you, the opportunity you get with the people and the Midwestern feel in Pittsburgh, blue collar mentality, and you live or die by the Pittsburgh Steelers, the Penguins, and even the Pirates, even though they've had some down, many down years, but diehard Pirates fans. So just a really, really fun time and really amazing things. And I was blessed to have the opportunity to have my kids go to many Penguins games, and are still Pittsburgh diehard sports fans to this day, now living in the Jets and the Giants world, or the Rangers, Islanders, and the Devils world here on Long Island.
Right. And you live in Pittsburgh, you have one choice.
That's right.
New York, you have to pledge your allegiance to one group or the other.
Yep, there's no doubt about it.
You grew up in a steel city, but you're in the lumber business. So give us a little bit of background. How did you find your way into lumber? And obviously you're out with Sherwood in New York now. So maybe just give us a little bit of your background, and then kind of a description of the company too.
Yeah, so like probably not until late 2020 did lumber become interesting to people. But back in the day when I started in the business, roughly 20 plus years ago, I grew up in the lumber business. My family, my great grandfather had an Eastern pine and hardwood sawmill in north central Pennsylvania. Went to college for finance, and the apple didn't fall so far from the tree, so to speak. And I got right back into the lumber business right out of college. Not back into the family business, as my father told me I needed to go do something else before I came back there. But had the opportunity to get an internship at a lumber and building materials co-op, a buying group, and got my feet wet there. And then was recruited by one of the largest commodity brokerage houses or conglomerates in North America called the Forest City Trading Group, and really got my feet wet there, and understanding really what was happening behind the scenes, and how product was sourced from the forest to the mill, and rail, and logistics, and waterborne freight, and how it got to the marketplace and then distributed it from there. So really understanding bulk purchases of lumber and breaking it down all over the country, and then had the opportunity to move back home or closer to Pennsylvania. And the company that I was working for at the time got bought out by Sherwood Lumber, and have kind of worked myself up through the ranks since then. That was over 12 years ago. Started out as a lumber trader, then became, moved up the ranks and took on more responsibility. And our organization is a family owned and operated business, second generation currently running it, third generation moving in. And, my job was to really help second generation transition to the third generation. So for lack of better terms, getting ready for my new bosses, but partners, really what it comes down to. We have a really, really good culture at Sherwood. You really have an opportunity to do a lot of different things, tremendous amount of autonomy. And, we've grown a lot since the downturn in 2008 to where we are today in 2021. We're going to do roughly 1 billion board feet through our footprint this year.
How many train cars is that through 110,000 board feet, right? Per car?
Right. So I guess that would be 100,000 rail cars, something like that. I mean, it's a lot. It's a lot. And so that billion, 73% of that amount is something that we would physically touch in our distribution footprint. The other would be the drop ship direct shipments that you would do from the manufacturer to the end user. But big volume. So, and people, it's ironic now that everybody's looking for lumber all over the place. So we get these odd emails back and forth. I'm building a shed in my backyard. Can you supply me with lumber? And we're like, no, not really. Doesn't fit the customer profile that we're looking for. We're selling, big mass quantities to the largest customers in North America. So, we are, for lack of better terms, the primary, secondary supplier of a lot of forest products goods to some of the biggest names that you see on the street every single day.
Wow, that's a lot to unpack there, but great overview. And if you don't mind, I kind of want to start back at the beginning there, because for a lot of people, they think forestry, they think harvesting the wood, and then what happens after that. But first of all, where is the wood mostly sourced? I mean, there's so many different kinds, right? You've got, the hardwoods, you've got southern yellow pines, you've got all these different types of wood. For yourself in your early days, and then, where you guys sit here today, where are you sourcing the majority of the wood? Obviously, you're not harvesting it, but where is the majority of the wood actually harvested from? Maybe just help demystify where wood comes from. That would be great.
Absolutely. Yeah. So, I think one of the largest reasons why we're in this predicament today is because the world doesn't really understand the supply chain. It's because it's changing right now. So when I first started in the business over 20 years ago, the majority of the wood brought into North America came from really one province of Canada, and that was British Columbia.
Right.
And they had the mass volume of fiber coming into the United States at that time. And that was for a variety of different reasons. And then it continued to increase because they had a infestation of an insect called the mountain pine beetle, which forced them to overcut because they had to take that fiber out of the forest. Otherwise, it would just have disintegrated and become an unusable asset or a disintegrating asset. So they were forced to go out there and ramp up production. It was great because we were building at that time somewhere between 1.6 to 2.1 million houses every year in the United States.
This was like 20 years ago?
Yeah, the market needed it in the early 2000s. So it wasn't such a big deal. It consumed it. But over that time period, because they were forced to over harvest, they had to then recognize that you can't just continue to harvest without having a regeneration and a replanting schedule, that there was going to be a period in time when that production of that region was going to be dramatically reduced.
Not to mention the environmentalists are going to go bananas if you don't
absolutely
something to help replant, right?
Absolutely. And then here in North America, the predominantly all the forests are all FSC or SFI certified. They're very, very well, very much environmentally sound. And you talk about lumber, and I think that's a common misnomer about lumber. Everybody thinks that, because you cut down a tree, you're a bad person. The fact is, the majority of sawmills, specifically in North America, all the sawmills in North America are probably one of the biggest environmental supporters in all of North America. Very cognizant of wildlife, fish, water, and so forth. So for every tree that they're cutting down, in most cases, they're planting 4 or 5 additional trees. So it's a really, really big thing. But going back to what I'm talking about, so where does the wood come from?
Right.
Early part of my career, predominantly British Columbia and Eastern Canada and the Pacific Northwest.
Right.
Now, because of that infestation of that beetle and now having to reduce annual cuts, you're seeing a transition to the cheapest wood fiber basket, and that is the U.S. South. And so Georgia, Mississippi, Alabama, Florida, the Carolinas, these Arkansas, Texas, these states now encompass the largest wood basket, not just in North America, but the world. And it's the lowest cost fiber to go out there and harvest and produce.
It's the lowest cost, but that doesn't necessarily mean the highest quality, though, right? So you're telling me we transition from higher quality to lower quality just as an absolute need, or?
Well, that's correct. I mean, not every species is created equal. It doesn't have the same strength rating, doesn't have the same quality. It doesn't have the same lifespan. Like some of it's not as quality conscious. So Southern Yellow Pine historically was like the redheaded stepchild of the lumber world, right? Like nobody wanted it because it was hard, it was brittle, it was very hard to dry, twists, and what have you. But over time, and technology has created this to be now a much more usable and user-friendly product. Also, think about how we built houses 20, 30 years ago. It was all by swinging hammers. Today, everything's pneumatic guns. So the labor time on the job site is reduced now with using advanced technology and so forth. And production building, whether it be truss manufacturing or panelized plants, has allowed Southern Yellow Pine to take a little bit larger of a foothold. So now the marketplace is transitioning where we have less fiber out of the Pacific Northwest. We have less fiber out of BC. Eastern Canada is starting to increase their production, but they only have so much that they can increase it.
Right.
The U.S. North is increasing, but again, only so much. The biggest increases in the world supply chain is going to come from the U.S. South, and that takes time. So you have seen some of the biggest conglomerates in North America really put their stakes in the ground down there for the last 10 years, being the Weyerhaeusers, Georgia Pacifics, West Frasers, Canfors, Canadian-based Interfor, Canadian-based companies really know that, they were very, very, very forward thinking, 10, 15 years ago, knowing that their wood basket was going to decline. Their future investment had to be where the logs were, where the trees were. And that's what they did.
The same thing could continue to happen, right? And we've seen this in many other commodities. Speaking of the U.S. South, cotton started out in the U.S. South. Now it's in West Texas, and corn production has moved further and further north as as global warming has kind of taken hold. So are you seeing some transitions now where things might be going to in the next, say, 20 years?
Yeah, very much so, I guess. So we always had,
or like, where are we going?
Right. So we've always seen certain markets but being kind of the melting pot of species. So where they once were predominantly Douglas fir, they're now taking hemlock or a combination of southern yellow pine or spruce or what have you. You look back 30, 40 years ago, the whole East Coast wasn't even spruce or SPF. It was Douglas fir from the Pacific Northwest or Canada, all not even shipped by rail, all shipped by break bulk or barge from Vancouver all through the canal and all the way back up the eastern seaboard. So all of the lumber sat on the ports along the coast. That has slowly changed over time. Now you still have pockets of those markets. New York City, New Jersey, parts of New England are still a Douglas fir market, even though SPF is the closest product that's produced to that region. But they have it's hard. It's what we call an old industry, and people it's a lot of old habits, so it takes them a long time to change. But I think in times like this year specifically, in the latter part of 2020, when you have a real deficiency in supply, people are forced to make change. They have no other option. I can't get what I used to buy. This is the only thing available. I got to go and buy this substitute product. And that's where I think southern yellow pine right now is starting to see some of this biggest push.
Filling that hole in the market,
right? Right. It's like, so, MSR, 2 and better product for truss manufacturing.
What does MSR stand for?
Machine stress rated lumber. So they would be using that for high stress loads and depending on mainly for truss manufacturing. So roof system manufacturing or a floor system. And in that application, there's not as much SPF available, spruce, pine, and fir. So they would use southern yellow pine that could potentially be substituted into that. And we're seeing places like Indiana and Chicago and Minneapolis, which were all big spruce markets, predominantly spruce markets, now taking southern yellow pine. It's gotten so to the point where there's not enough MSR production in Canada, where you're seeing southern yellow pine stuff from Georgia shipping up to Quebec, shipping up to Ontario to fulfill some needs into that marketplace as well. So it's definitely changed.
Sorry, go ahead. You had another point?
No, I was just saying it's seeing a substantial change in substitution of those products. They're getting deeper and deeper into a market that they historically would not get into.
Yeah, that makes complete sense to see things move around that way, but it also raises questions. 2 different points. One that I want to bring up is you kind of mentioned again your early days, the logistics and transportation. But now you're talking about moving wood from one region to the next where it traditionally hadn't moved. Well, that requires labor and it requires trucks and trains. And, we're in a kind of labor crunch, right? Where we have, inability in many manufacturing types of businesses to, hire the right skilled labor to handle a lot of this stuff. What are you seeing on the lumber front? And is that causing for delays in distribution or slowdowns, which also could be attributing to the rise in prices?
The biggest challenge we have right now on the logistics side is not so much rail. There are rail problems, but they tend to be more seasonal. Trains slow because of the winter time, like getting product from BC across Canada on the CN over to the eastern seaboard tends to take longer. It's just the speeds of the trains slow down. That changes as the weather warms up. And we had a combination effect this year a little bit because the labor force was affected by COVID. So they had a lot more call outs. So there were issues in regard to that. I think this year right now, not so much on the rail side, or at least in the current state, is because I think rail is starting to catch up based off the data that we're seeing right now on rail speeds. Is the flatbed trucking for availability for lumber to ship is very, very tight right now. The worst that we've ever seen it. We only had one other time that was similar to this, and that was in the first quarter and going into the second quarter of 2018 when the federal government mandated e-logs.
Right.
That took about 20 to 30% of the capacity out of the marketplace for a period of time until they could figure out how to, move those trucks more efficiently with the regulations that were now in effect.
Right, and you need a specialized truck to move these massive logs, right? So it's not like you just you call up local transportation company and say, yeah, I need to move some logs here. You've got some other issues.
Right. It's a lot of volume and truck or lumber in particular. As if you go look at the rates that it typically is transported around the country, it historically is the lowest paid, right? We pay the majority of the truckers that we're paying. Lumber is like the cheapest commodity to go out there and haul, and we typically go out there and try and move it at the cheapest rates. Well, now that there's so much competition from all these other commodities and all these other goods that need to move to the market, it has moved our freight numbers not just like up a little bit. We're seeing in many cases 2x and 3x on some of these lanes that we're operating in. So
I'll be honest, Kyle, I like that you're paying people more money to move lumber, because I get on the road and I see a log truck going down, and all I could think is that thing's going to roll off and come through my windshield. So if these guys are paid top dollar, I'm sure hope that they know what they're doing.
Yeah, no doubt about it. It is a skilled labor force, and it's a tough job. I mean, trucking in general. I don't think whatever goods that you're trucking around, I don't know that would be a job that a lot of people really want to do. So it's important that the industry changes. It's going to have to cost more for organizations, no matter what goods that you're shipping, to get your product to the marketplace. And if not, we're just not going to have enough trucks. And the value proposition that you bring to your clients is going to continue to be more challenged, because you're just not going to be able to do what you historically has been able to do in the past. We had a unique conversation in one of our meetings this week with our team and talking about that. It's not like everybody's talking about labor, but it's interesting. I was reading a Wall Street Journal article, I think from 2 or 3 weeks ago. Sure. There's roughly 4 million people sitting on the sidelines, just not coming back to the workforce. It's not like we're at full employment. Right. It's just that there's a lot of money that's incentivizing them to stay home. Plus, there's a lot of fear still with this pandemic that you're dealing with and what have you. And until people feel in a more comfortable state, less anxious, we're going to be in a more challenging environment for a period of time. And, lumber mills, all these other things, we're going through massive inflation and also massive profitability. So in all likelihood, wages are going to have to move up in order to get people back to work as well. So it's not just one side of the, one single problem. It's a three-dimensional one, and we have to work together as an economy to get that done.
That's interesting perspective as well, because you're talking about needing to get people back into the workforce. You're talking about the shortage in supply, and typically these things don't correspond with higher prices, right? Typically, the cure for higher prices is typically higher prices, because eventually you're going to bring on more supply to the market. And right now we're not seeing that, but I guess it begs the question. Is supply likely to continue to increase to try and meet the demand? And if so, the same conversation is kind of like a circular reference, right? Well, now we need more people, and now we need more high quality, more high skilled labor. And so are we going to be able to fulfill all of this at the same time in attempt to drive prices lower, or are we stuck in a upward spiral of price and logistical issues?
Well, so I was on a webinar a few weeks ago with many representatives of the NAHB, the National Association of Home Builders, right?
Okay.
And their first thing specifically is, we have Mr. Biden, we need more lumber production. We need more lumber production. Our clients need more lumber. It's all a supply problem. Well, the easiest thing to do to get more supply or what have you, or to slow this price acceleration down, is to decrease demand too. You could say, like, hey, we can't afford to build at these prices. Stop. This is too much I can't pay this price anymore. So therefore the supply would catch up with the demand and we'd be back in equilibrium. So it's not a one side fits all type category. So there's a multitude of things, but I think like you said, the thing you said, what's the first thing that curbs high prices is high prices. That will come into effect and hold true to lumber at some point.
Right.
We're just not there yet because there's just too many unknowns, and there's too many people that just are, we're in a frenzy for whatever reason to buy a home right now. Like it's unbelievable.
Free money, interest rates are low. The government's giving you, what's it up to now? $3,500, $4,000 to, do with what you want. Maybe those people bought Bitcoin and now they're trading it back in to buy a house. I mean,
well, maybe not Bitcoin this week. I think it's down a little bit, but but you're right. Like it is all about affordability, and just because the price is going up doesn't mean the home's less affordable, right? Because the interest rates are still at or below 3%. What is this really affecting me over a 30-year period? Right now, it's pretty minimal, and I think that's a fact. But the prices, I was just talking with somebody before this call, is that the prices that we're seeing today, we're going to close at an all-time high this week on the lead futures contract. Well, that takes about 30 to 60 days before that price actually gets into the marketplace.
Right.
So what is, the lumber dealers are going to readjust their prices here on May 1st. And when they do so, what is the consumer reaction going to be? Because they say they have all this demand. They say have those. I would assume that we will see an adjustment in the amount of flow of product to the marketplace. At some point, it could be as early as May, but with a jump like we just had, 20-30% in a 30 to 45 day window, that's a big chunk, specifically at the prices that we're already at in lumber. When we were sitting at as you said earlier in the conversation, a year ago, a 30% move, not a big deal. Right. But now that we have already moved, 260, 270% up, it's a very big deal.
Big deal. Now that actually speaks well to your company and some of the work you do. Right on your website, you offer risk management practices, and clearly we're involved in the risk management business as we collaborate with our teams. And so I'd be interested for you to have a chance here to kind of share, how are you helping your customers forward price some of this risk, maybe even strip a little bit of it out of the market, or at least understand their costs as they put a bid on a job or a multi-family home project or whatever the
So we have a program called Guaranteed Forward Pricing, and we provide our clients an opportunity to go and bid and get projects at a fixed price and then supply them the material at that fixed price for periods of time anywhere from a year to 2 years out. So for example, today we are shipping product that we would have quoted a year ago to job sites in Atlanta or Dallas or Jacksonville, or up here in the New York state area, Pennsylvania, Virginia, that we would have quoted last year at prices that would have been 300 times lower, right? So we have lumber today that we're shipping customers over this period of time at a price that they were able to go and bid the job, get the customer to commit to the job, and last year, and now we're they're scheduled and they're delivering the product to the job site for that customer. And we offset our risk based off of it's a correlation trade. We have proprietary data of over 40 years of all lumber items, how they correlate to the 2x4 2 and better Western Canadian derivative that's traded on the CME. Right. And so we offset that risk with buying the board against that commitment at the time that we go and sell that. And then we offset that, we close out that trade when we deliver the product, and then that would be the margin that we would make over and above the risk that we took, or the basis that we made or didn't make in the or produce in that transaction. So it's a very unique thing. I think we have competitors in the marketplace that do it. I don't know that they have the data and are looking at it in the same way that we are, right. Because 2x4 2 and better Western Canadian spruce is only one item that's produced at a sawmill. They produce hundreds of other products. And so what we do is, because of all of this information and looking at this stuff over time relative to itself, relative to other products in its category, relative to the seasonals, relative to the hedge or to the derivative, we are able to go out there and provide a price for our customer every single day for some delivery of that item at some point in the future, and actually deliver it to them at that time. Some people try to do it, but they're doing it. It's more of a, hey, the price of 2x4 2 and better is this, the price of this other product is that, whatever the spread is between that, they go and do that. They at that time, they many times take that trade. What they don't recognize is that just because a 2x4 2 and better Western spruce goes up or down by 1 point or 2 points either direction, that other item is not directly correlated and would not necessarily move in the same manner, the same time, and what have you. And it gets a lot of people in trouble. But to each his own. That's the business model. We feel ours is a little bit more unique and very disciplined model. And we have clients that are really enjoying going out there and selling product every single day and not having to worry about the product going up or down. They know that they got a job, they got a commitment by their customer, they have a commitment by their supplier, they put a margin on top of it, and they just go out there and deliver the wood, and then they go out there and try to get more and more of that. It just becomes more of an annuity type trade, as opposed to how the majority of the industry works. Typically is they go and sell the product, and then they take it back to their purchasing team and say, hey, I sold this, how do I go buy it now? And
figure it out.
Figure it out. And it's just a more disciplined and what we like to say, a little bit more scientific approach to going out there and procuring product.
I couldn't agree with you more. I mean, really, at the end of the day, you're utilizing financial derivatives, or in this case, commodity derivatives, what they were built and intended for, which is to maximize the margin of your business and mitigate risk. So I would say use this platform here to give a shout to the CME and ask them to come up with more contracts that would fit all the different species.
Yeah, the challenge is I think getting more and more people to use it. I think the funny thing is, in the lumber business, the whole industry looks at it, but the amount of people that actually trade it is so few. And I really, to be honest, I would want to get more people, whether they do it with Sherwood Lumber, they do it with their broker, they do it, they open up an account on Interactive Brokers. I don't really care. Let's go out there and increase the open interest in any way possible, because it's better for all of us. If you're going out there and using this tool that's there, it's there for everybody to use, to go out there and offset your risk and help you, provide an insurance policy for catastrophic loss, or add more margin to your business. I mean, use it. It's there. And we'll help you. We'll consult with you, whether you use us or not. Like, it doesn't really matter. But I think it's really, really good if more people in the industry use it. I think couldn't agree more. A lot of people really struggle with the correlation of how it works to all those other items, and they also, unfortunately, our industry is based on broad speculation. Right. A lot of cowboys in the lumber business, and they don't necessarily they don't.
You're supposed to call them lumberjacks.
Yeah, right. So, but they you have to understand it's a hedge, and it's not. Yeah. You're not trying to win on both sides of the transaction. What you're trying to do is correlate it so it provides you a cushion. And I don't think, and a lot of people don't necessarily look at that from that scenario.
So probably find yourself looking for new smaller distribution companies that could roll up and access some of these tools and resources that you have. I mean, I got to imagine, has acquisition been a big part of the growth of your business?
So it was early days that I came onto Sherwood at the financial downturn in 2008 through 2012. That's exactly how Sherwood grew through acquisition. We put on a big push, and part of my responsibility in trying to go out there and take with an acquisition, you get a lot of good, and but you get a lot of bad too. You get a lot of everything. Yeah. And the key is how can you go out there and take the best parts of that. And the biggest thing for us was, one, getting our culture aligned, getting our people to understand what our vision was as an organization, what's our mission, and how are we going to live by that, by our core values. And we really put a lot of time and effort into that, specifically in 2016 through 2018. And it's never done. You're always doing that. But once you find the right mix of individuals, you have the early adopters, and then you have the people, the believers, and then everybody's like, well, I guess if everybody's doing it, I'm going to do it too. And all of a sudden you get that together, and they have togetherness, and recognize that the team is much, much greater than the individual. It creates an amazing environment, and the performance levels just go up in a way that you just never would have thought. And that's one thing that we talked about. I specifically talked about with my owner. I said, you're going to see our business grow in multiples in every metric that we talk about. It's going to perform in multiples of what you thought was the best in the past. And he's like, looked at us and like said, what are you talking about? And I'm like, why? I said, because you have people that are bought in, and now you're going to see some of the better things that you would never have thought, because you always had something pulling against that. When you have that thing pulling against you, it's not necessarily going to provide a true result. So, part of it is the lumber appreciation and acceleration that we dealt with over the last year and a half, but a lot of it is our team really recognizing that this is a stressful environment. We're all in this together, and we're going to go figure it out together. And we're having a lot of fun doing that right now. It's really cool to see.
It sounds like it. Yeah. I mean, I guess a couple last things is, in general, where are you guys located? What areas do you service the most? I mean, you've got obviously offices in New York and Pennsylvania and all over, but where's your concentration of your business? And then I guess next after that'll be, where do you see lumber going in terms of price, direction over the next few 3, 6, 12 months?
Okay, so the first part of that, we're based in our headquarters are in Melville, New York. We have offices in Melville, Tampa, Florida, and Palmer, Massachusetts, and Lake Oswego, Oregon. We sold into all 48 states inside of North America. We did not sell into Alaska or Hawaii last year, but we sold over 2,000 customers across the country to over 6,000 ship-to destinations. So it's everywhere. Our biggest state is still New York. We still have the bulk of the volume. That's where the company was founded. That's where the company really entrenched itself in the metro New York market. But I think Texas is sitting at number 2 or number 3 as far as our total volume. And then, down that I-95 Eastern Seaboard, I would say is probably, where the population really is centered around the United States, and those metro markets is where we sell a lot into. As far as the lumber market, where do I see it going? I really think that a couple of things. We have 2 specific data points that we've been watching since late July last year. We believe this lumber, and based on looking at those 2 data points, it only what happened inside of those things only happened 7 times before that in the last 35 years.
Wow.
And in those 7 times, it created a new cycle. And that new cycle lasted anywhere from 9 to 42 months. So an average of like 25 months on those 7 times. So this happened in July of last year. We're in approaching month number 10. So of a cycle that we believe could last longer than 24 months. But I think it's probably an 18 to 24 month cycle. So we still have a long ways to go.
Well, that would match up too with the Fed's interest rate discussion, right? 2022, 23, they start potentially raising rates. I mean, that could also all coincide with each other.
So I believe that, price decline is really not going to happen in any major capacity until demand slows. So demand has to slow down for some reason. And I think, there's a lot of different things that can slow down demand. I think what a lot of people are going to be looking at specifically, we touched on a little bit earlier in the conversation, is affordability.
Yeah.
That's going to be a big key, and that comes with rising interest rates. It comes with inflation of other products, but inflation of lumber as well, and lack of labor growth or salary growth, right? Like people,
Right.
like we might be inflating all these products. The CPI might continue to go up, but we might see compensation stay flat, and that's going to, really affect affordability over the near term and long term. So I just don't think additional supply can come to the market so fast. We're in a global supply challenge because you have China that's just ramping up. Europe is very, very steady. We didn't talk about it earlier, but the European wood basket is very instrumental now to the U.S. markets.
Sure.
A lot of people don't realize that they're buying lumber from Austria and Scandinavia and Germany and France, but that does come here. Sherwood Lumber does import, a significant quantity of it every month, and that is very instrumental. That will start to increase here in the United States, and that might help. But I still believe it's only if demand kind of slows down a little bit.
What about China? I mean, everybody wants to know when you talk commodities about China. I mean, is there any market for either your wood, your services, or wood from China to the U.S.? I mean, do you guys even think about China in relation to?
So we do import some wood from China. There is a large tariff on forest products from China.
Okay.
What we do primarily buy is veneer grade plywood, birches, and oaks and what have you, used for cabinet grade manufacturing or furniture grade manufacturing. It's not a big part of our business. It's less than 5% of our overall business, but we do a little bit of it. China, I think, in the way that they affect the wood products market most is them as a consumer of it. Like, so okay. Whether or not Canada or the US South exports a tremendous amount of logs to China. So does the Pacific Northwest. And China, at least what I'm reading about, is very similar to US. They continue to spend a lot of money on infrastructure build, and the US is going to be doing the same. So I would think that the demand for forest products, metals, and what have you continues to rise in that market.
It's going to be interesting to watch. I haven't seen it yet, but we have a division of our company, RCM China, that does trade the Chinese commodities markets. And I don't know if there's a lumber contract. I know there's many other ones you would never even think of. But I guess we'll have to watch to see what they do on that front.
Yeah, I mean, I do help participate in a small advisory committee with the CME in regard to the lumber contract.
Okay.
One of the big things that they've talked about, you talked about the other products that they want to do. The biggest thing right now is the lumber contract is predominantly, it's written for Western produced product. What they're trying to do is build an amendment for Eastern Canadian product to be deliverable into the contract. So that's the next move. And then
maybe the mini lumber, would that help smaller distribution companies?
It could, but we'll have to see. I think the biggest thing is getting the Canadians an option, specifically the Eastern Canadians, an option to deliver product to the board. That would be substantial, and getting some of the larger manufacturers to use it more regularly.
Interesting.
Yep.
Well, Kyle, this has been super interesting today. I really appreciate your time. Before I let you go, I got a couple quick, fast questions to finish out and kind of wrap up. I guess what is your favorite type of wood? If you had to, if you were building a house and you were going to put, you're gonna make a log cabin, what's it made out of?
I got to say Douglas fir. That's what Sherwood. That's one of the predominant species that Sherwood Lumber trades. So I'm going to say Douglas fir.
Douglas fir. Okay, great. I'll tell my builder to make sure he's using that. Okay, that's good. So you've been out in New York. How long would you say you've been out in New York?
So this will be my fourth summer in New York. So I get my fourth summer of getting to play golf on Long Island. It's just, for those of you who have never visited Long Island, there's just a lot of old golf courses here, like old Tillinghast. A lot of great designers that built some major courses here, and had some amazing tournaments back in the day. So the adage, if you play for a $2 or $3 Nassau, that's because of Nassau Country Club, which is based here on Long Island. So supposedly that's where Bobby Jones purchased Calamity Jane. So another little thing. So for you golf historians out there, but
yeah, you're still in early days out there, so you're eating up all the culture. That's good.
Yeah.
What I gotta ask, what's your best score at Bethpage Black?
I kept it under 80. I shot a 78.
Wow. Yep. See, I'm glad I asked before I tried to play a Nassau $5 Nassau with you.
Yeah, definitely. It's been it's fun. It's fun to play there. But I can tell you, my other scores were not even close to that. So I was just in the zone that day.
It takes that. I actually shot. I'm 43 this year. I shot my best round last summer in Nashville with one of our partners down there. I was flat 80, so that's
awesome. That's good golf. So we'll have to come out. I'll come out to see you, and we'll go to Muirfield, and you can come here and we'll play Bethpage.
Sold. Sign me up. Sign me up. And last question: if you what's your favorite extreme sport? If you had to either be involved in one, you've done something in the past, or you could do one in another lifetime. I've
never done one, but I would like to do like a Tough Mudder or a Spartan race, something like that. I have done a couple half marathons, and I ran one marathon, the Pittsburgh Marathon. It was
impressive.
It's my claim to fame is I ran my best half marathon and my worst half marathon in the same race. So
that's a tough race. I mean, it's true. Gut check there. Yep. You'd be surprised at the answers I get. I've had rugby. The skydiving, of course, is an easy one. So pretty interesting responses from different people. But
cool.
Appreciate the time. Last thing is how do people get a hold of you if they want to get in touch with Sherwood or yourself, discuss opportunities, lining up jobs, anything along those lines?
So the best way to get in touch with me is to call Sherwood Lumber 800-645-6226 or send me an email, klittle@sherwoodlumber.com.
Perfect. All right, Kyle. Well, we had a great time here today. Hopefully we'll do it again, kind of check in on lumber prices from time to time, and obviously do, like you said, let's get that golf game planned out.
Yeah, it's cool. And the Browns might be the team to be in the AFC North this year. You never know. They're tough.
Bears. Bears. They're
not with Andy Dalton at the helm. No. if they got Russell, if they made the play for Russell Wilson, maybe I would have said that they would have done something, right. But no.
That would have just been too good to be true, I think.
Yeah.
All right, sir. Well, thank you again.
Thank you.
Appreciate time, and we'll get this all wrapped up and get it sent to you. This is the Hedged Edge. Thank you.
Thank you. See you.
You've been listening to The Hedged Edge. Links from this episode will be in the episode description of this channel. Follow us on Twitter at ag_RCM, like our Facebook page under RCM Ag Services, and visit our website, read our blog, and subscribe to our newsletter at rcmagservices.com. If you like our show, introduce a friend and show them how to subscribe. And be sure to leave comments. We'd love to hear them.